Hi everyone. Today let's talk about Canada being on fire. Then we'll talk about some of the stocks that were moving. Then we'll take a look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Canada's on fire, and all of that smoke is flowing into New York City, and it's affecting some of the air travel and Google employees in the New York area. This isn't super relevant to the economy, but I did think it was interesting that they did push back into the work from home motto, at least for a little bit. We'll see how that plays out going forward, but kind of interesting. Moving over to stocks that were moving here, we have Affirm getting a deal with Amazon. Stock was up quite a bit. United Foods up 15%. Again, deal with Amazon. Coinbase rose a little bit after falling 12% yesterday. We talked about that. ARK Invest bought up some more shares yesterday as well, which is interesting. Apparently, they're not super worried about these violations, although I would be as an investor. Yext surged 38%. Software company Tesla up a little bit more. As the Model 3 qualified for that tax credit, Tesla's been rallying anyway, but some more good news for them. Stitch Fix up 28%, big gainer on the day. Then you got Dave & Buster's up 18% after they did quite well on earnings. And then Campbell Soup down almost 9% after missing on earnings and pushing out bad guidance. Moving over to some data here. Like I did yesterday, I pulled this from Game of Trades. I do like their channel quite a bit. And they're talking about how leading indicators are pulling back quite a bit, back down to some of these areas that we saw during recessions. However, the S&Ps are basically flat compared to where they have been, not following the economic data. It's not impossible for markets to recover early. We did see that here during COVID. Markets rallied, economic factors lagged, markets are rallying, but we haven't seen those factors start to tick up quite yet. And they're certainly not following each other in the same way that we saw during the financial crisis or during the dot-com bubble, where they kind of hung out in that same zone and then rallied together, or lagged and then rallied together back into positive area. So we're waiting to see what happens here. Doesn't necessarily say we're going one way or the other. We're just disconnected, and we need to see these indicators come together one way or the other. Moving over to Max Pain for Friday, you can see we're up to almost 1.5. Put call ratio continues to come down a little bit. Highest call strike now 435. Definitely some big calls were sold today. Finally, some calls entering the market, which is dropping that put call ratio. 425 still seems like a base if we are going to go lower. That seems like the lowest in terms of put strikes. 429, 430, still in that range to get all of these puts to expire worthless. But we definitely got some more bearishness today. I actually want to talk about next week's expiration just for a moment. You can see the huge amount of options in here, almost 5.2 million. Put call ratio still above 2. Tons of options here at 420. Really anything above 420 makes sense for next week. Max Pain is all the way down at 410, which is interesting right here. So certainly could go lower towards that Max Pain for the higher option expiration next week, which would indicate a little bit of bearishness between now and then. We'll continue to monitor this going into next week. Obviously, there's a lot of data for next week as well. So we'll keep hitting on this one, but just be aware that next week, tons of options in the market. Moving over to the charts, starting with the SPY here on the hour and the daily, you can see we continue to kind of top out 428.59, continuing to be resistance in here. We're below all the short-term EMAs as well as VWAP on the hourly chart. Definitely looking like it's set up for a pullback. The SPY held up quite strong today. The rotation is still holding up the SPY versus the NASDAQ. We'll talk about that in the next chart. But this daily chart definitely looks weak. Looks like we're setting up for a pullback into that 423 area, down to the 9-day moving average, around 422.68. You also have that trend line at 423.75. Momentum starting to pull back. RSI starting to pull back a little bit, and definitely showing some weakness here. Moving over to the NASDAQ, similar thesis. We broke this level, fell throughout the day. Bearish momentum, bearish RSI. Super oversold on the hourly chart, so we might see a little bit of a pop into the open tomorrow. That is kind of what I'm banking on. Daily momentum, daily RSI showing weakness. Big bearish volume today, so definitely looks weaker than it has. Watching this 346.87 level. If that breaks down, you have the 200 SMA on the hourly chart sitting at 345.77. If that breaks, there's quite a bit of room before we hit a major support. About another $8 or so of downside potential on the NASDAQ. So a little bit overbought, definitely moving back towards that 50 line on the daily chart. If I had to guess, I would look for a little bit of a pop, maybe into the mid-session, and then that bigger pullback, looking for support at 346.87. Moving over to the Russell and the Dow, you can see the Russell continues to be a rocket ship. The Dow held support, and it's looking for a retest up to 339.11. If we break out, that would be nice. If we get into this zone and break down, that's going to kind of look like a double top. And then if it breaks back down to resistance and then further, that's going to look very weak. We are coming off of a higher low setup, so it certainly could make a higher high here. Didn't look slightly bullish, but you want to see it get above this area. If it does, I'm looking at 343.23. Moving over to Apple and Tesla. Apple continues to pull back, hitting the 9-day moving average. 176.13 is that next level I'm watching, as well as VWAP right behind that, 175.67. Momentum, bearish. RSI, still bullish, but moving bearish. Again, this could be a similar move to here where you just get overextended, retest the 21, and then start to make higher highs again. Certainly possible here on Apple, but it does look weak here in the short term. Tesla finally showing just a hint of weakness. Big gap up, wicked, and then sold off. Still a positive day, but we're right in the middle of this range here. It looks more likely that we're going to get a gap down and then a retest of this 217.14 level. This has been a powerhouse for the NASDAQ, and if it does pull back into this zone, you should expect that the NASDAQ is probably going to break down as well. Momentum, slight step down. RSI, super overbought. And it looks like we're getting ready for a pullback on Tesla. Moving over to Roku and Meta. Roku broke out through that huge wick and then sold off a little bit. Still looks super bullish. Watching for $74 at this point. Certainly could come back down, retest 75 and then continue, but definitely looks very powerful. Missed this move. Definitely should have been trading it the whole time. I talked about it multiple times. I just didn't pull the trigger. Moving over to Meta. Topping formation, selling off to the 55 EMA. Bearish momentum, bearish RSI. See if we hold here at the 55. Certainly possible. At this point, it does look significantly weaker than it has recently. Kind of looks similar to this 1 May pullback, which did pull back to the 55 EMA and then get the continuation. So certainly could do this again. Not impossible, but we're at much higher prices and it seems like we're pulling back a little bit stronger in my opinion. Moving over to AMD and NVDA, you can see AMD pulling back again. This looks like a higher low now. Just want to set up a lower low after breaking out through this kind of midpoint area, get below 114, pull back to the 55 EMA around 105. That would be interesting. Looks like semiconductors are set for a bit of a pullback, bearish momentum, bearish RSI on both of these. And at this point, it looks like NVIDIA might be pulling back all the way to that 346 area. That would be interesting. We took out the midpoint, so you have a double top now coming off of that huge earnings announcement. I don't necessarily think they're going to retrace all of that, but it certainly could pull back to maybe that 346 area. Moving over to Alphabet and Amazon, you can see Alphabet pulling back very strongly. Again, looking at that 55 EMA as a potential area for support, down around that 118 to 120 area. Amazon also throwing a big leg down to the 21 EMA. Momentum, turn bearish, RSI, turning bearish, big volume on that candle. Similarly here on Google, a step up in volume from the previous candles. Overall, it looks like big tech and all the biggest stocks are pulling back quite dramatically, at least in the short term. Moving over to sectors, starting with consumer staples and discretionary, you can see staples still holding that 72.50 zone. Talked about this being an important level, continues to hold here. Want to see that start to perk up to that 74 area. That would also be a nice play into defensives, meaning that markets are getting a little bit more scared of some bigger pullbacks. Not quite seeing that yet, but we are seeing a rotation into cheaper stocks and away from big tech, which is interesting. Discretionary also pulling back to support, still holding just a cent above my level. If it holds, we got 162 up here. If it breaks down, we have major trend support, just about $1 lower, and then the 21 EMA sitting at 156.24. Momentum did tick bearish here on the 4-hour chart. RSI also below the SMA, definitely looks weaker going into tomorrow's session than it has here recently. Absolutely could get a perk up, dip below, get back above, get a continuation rally similar to what we saw on this previous move down, but it's definitely more extended to the upside than it was here recently, and we might see a more substantial pullback, maybe all the way down to 153.90. Moving over to oil and gas and utilities, two top performers here for today. Oil and gas breaking out, looks very strong. Talked about this base at this previous low as well. Very strong base, looking to push up to 135. Looks solid. Got the 144 EMA sitting at 133.15, certainly possible resistance area as well. But overall, looks strong for the next couple days. Utilities also breaking out, also looks very strong. Got above VWAP and the 21 EMA. Might see a little bit of chop pulling back from this zone. A little bit premature. Maybe we get a double bottom. That would be a little bit dramatic. I would expect this to maybe higher low, certainly possible. Maybe back to this 65.75 level. Pull back in here, get a continuation rally, but this is very powerful. Bullish momentum, volume stepping up, RSI crossing the 50 line. Utilities looks quite good going into tomorrow's session as well. Moving over to transports. Transports look bullish, got the breakout off of the continuation, higher high versus the previous high. We're above major trend resistance. We're above this major high going back to April. Everything looks solid here on transports, generally indicating that the Dow should be going higher as well, potentially pushing all the way up to 237. Moving over to yields, we got a little bit of a pop in yields here today. We'd been channeling sideways for a couple of days, so I hadn't been covering it. But look at this move here on the 10-year, quite interesting. Big move. Almost 0.2% on that move today. Got back above 3 3/4. Looks very nice. I still think we're probably just going to chop in this zone for both of them. So we have a high and a low now. We'll see what happens if we just kind of hold at these levels. We didn't talk about Fed futures because they really haven't changed. We do have the Fed meeting in about 6 days. Still looking at a 75% chance or so of a pause. So I still think we're going to get a pause. And I don't necessarily think that yields are going to continue to rally like crazy, which is why I think we're just going to kind of hold at these two levels on the 2 and the 10-year. Moving over to breadth, we're getting that continuation higher and that breakout. We've talked about the rally expanding into the IWM and away from big tech, and that's definitely what we're seeing here. IWM rocketing higher, lots of other stocks starting to participate in this up move, and it's no longer just those biggest stocks in play. Interesting to see them pulling back a little bit and everything else basically starting to rally. Moving over to the dollar, no change to my thesis. Still think this is kind of setting up as a bull flag. Tested that lower bound as well as the 200 SMA on the 2-hour chart. Daily chart just looks like a bunch of wicks in both directions. Still looks like a bull flag in my opinion. Moving over to JNK and TLT, you can see JNK threw a huge wick and then pulled back into this zone. We got below my trend line, which is not what you want to see. Definitely interesting here. So we got a higher high and now we have a lower low back to back. Very strange. Momentum pulling back. RSI looking kind of weak. Just barely below the 50 line here. If this continues to break down tomorrow, that's going to be quite weak. It's kind of strange to see this pulling back as we see the Russell continuing to rocket higher. So we're seeing kind of risk on and risk off at the same time. So really playing the rotation is what we're seeing. Lower high setup, lower low, definitely stuck in this zone. If it takes out this 130, 120 level, that's going to be quite bearish. But like I said, on yields, I think we're kind of stuck in this zone, at least for now. Moving over to the volatility indices, MOVE index moving a little bit higher here. You can see what that looks like. We were cratering there for quite a few days in a row. Got a little pop, a little engulfing candle. Definitely interesting to see. Momentum ticking towards bullish here for the first time in a while. VIX not showing much anything, kind of stuck in this zone. Talked about this being a very key support going back to 2019. We'll be watching this one closely, but no change in trend quite yet. Moving over to my accounts, obviously I got cratered with that QQQ position. I took off all of my puts very early in the session, and I did put a few back on right at the end. We are at a fairly important level of support right around that 347 area. I think 347 might hold tomorrow, and I think we might get a little bit of a pop into the open like we talked about on the charts. So we'll see how that plays out. I still have those shares. I probably should have sold them when we broke the level like I usually do, but I just didn't do it this time for some reason. Should have followed my rules. Definitely would have saved me some money. But I did roll down my calls throughout the day, and I still have more calls on here for tomorrow at $3.49 for $1.39 for 2 of those. So continuing to collect credits. I did sell some calls throughout the day as well, which did help compensate for a little bit of losses. Definitely could have done better with that. Otherwise, looking at the IWM, I had that put. I rolled it out one expiration, collect a little bit more credit there. IWM still looking very strong. I also picked up some positions here in XOP, sold a covered call for 129 in 2 days. Just trying to pick up about $1.20 credit. Looks very good already. Rallied nicely into the close. I also sold a 127 put for 50 cents here in my individual account. Both of those positions look pretty good, and I think XOP is probably going to go higher tomorrow as well. Overall, short-term bullish on the Qs, just based off that support level around 347, and then bullish on the rotation into IWM and energy. Let me know down in the comment section what you think of the fires in Canada or any of the stocks that are moving right now. Are we going to see big tech and the top players continue to pull back while the IWM continues to rocket higher? Or is this just a short-term aberration? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.